Morning, everybody. Welcome to another Market Report brought to you by Mike Bjork. Today is Thursday, January 14th, and we got just the one economic news release. Remember, tomorrow will be kind of the bigger one. We have a little bit more, actually, kind of a variety of things from some manufacturing to consumer sentiment to retail sales tomorrow. But today we got the weekly jobless claims, and as you can see, we had another increase in the jobless claims, which kind of comes to no surprise, primarily because once you have the holidays over, people that had the temporary jobs go back to unemployment, and so it's really not a huge surprise. But they're not really going up a whole lot either. So if you factor that, it's still under 300,000 people applying for every week for unemployment. It's still pretty good numbers there. So last week had 277,000. Forecast supposed to dip slightly, or at least be in that same range, and went up a little bit to 284. So a little bit higher than what they expected, obviously, at this point. Stock market's up. It's kind of getting a bit of a relief rally, so to speak, after taking a pretty big beating since the beginning of the year. It seemed like every day either oil or something else was creating static with the market, or China, for example, were creating a lot of static in the market, and then equities. So the bears have been kind of coming out and pushing stock prices even lower, which on the other hand has been helping us out with the bond prices and interest rates on there. Oil price went up slightly. They're up to about $31 a barrel. So I don't know if we've quite found the floor yet, but because of the good news, it at least hit something and went the opposite direction. Stock market likes it. There's also some comments made by a Fed member Bullard earlier today, and one of the things that he basically said that he doesn't think inflation is going to be tamed anytime soon, or at least reach the point where, like, because it's, remember, it's at 1.3% on the PCE core, and they like it about 2%, and they don't think it's going to rise too significantly anytime soon. So the pace of the rate hikes may be somewhat dependent on that, as well as looking at other exterior forces like the global market and things that could maybe influence the American economy here. So far the other economies haven't been putting too much drag on the U.S. economy. They've been still showing some growth, very modest growth. Some people are thinking that China might be kind of turning around, and that could potentially help out the global economy as well. So let's go ahead and take a look at what the bond market, and as you can see, we've have not been able to hit the 200-day moving average. We can't seem to stay above that. We keep getting pulled back from it. Today we're down about 6 basis points from where we left off yesterday. We were started off higher, so it's actually about 12 basis points we're down from for today. But from where we left off yesterday, it's about 6 basis points. So pricing is going to be in that. What that translated is pricing will be a little mixed. So those who came out with pricing this morning, usually the East Coast banks, will come out with their pricing earlier. They're going to have a price change for the worst. Those more of us on the West Coast here will have pretty much about the same price. We won't really have the time to fluctuate with the pricing, because they're about obviously with the 3 hours advantage. They'll kind of see where the markets are in. Right now, this is the market's down a little bit from where we kind of started, about 6 basis points. All right, folks. Thanks for watching. But also give you a heads up, if you guys are have any loans floating out there, I would definitely recommend locking in, as this 200-day moving average has been. The more we hit it, the stronger it becomes, and the more difficult for us to break through it. And what that could do is potentially push us down further down. So this could this ceiling becomes a little stronger, and could eventually push us down further, which would rise. Rates could go up a little bit on the period. So in the near term, I would definitely start locking in if you have any loans floating out there. All right, have a wonderful day again. Thanks for watching, and we'll see you guys tomorrow. Take care.